So every time something big happens in the world, whether it's war headlines, missile strikes, political tension, or a good old 2020 pandemic, people always ask me the same question, and that is, should I just pull all of my money out of the stock market? So right now, with everything going on between the US and Iran, we're starting to see some fear getting back into the market, some volatility. But today I want to talk about this from a financial perspective, not a political one, and explain why panicking with your money is usually the most expensive mistake you can make. So if you're building wealth long term, this is when discipline really matters. So I'm not here to downplay global tensions. So when military headlines hit, it's always serious. But the stock market has lived or survived through so many of these things. So many things such as war, terrorist attacks, oil shocks, financial crisis like 2008 financial crisis, pandemics like 2020 COVID. And here's the pattern. Fear spikes, the markets drop, normally pretty quickly. People panic sell, and then the market slowly recovers. So just a little piece of advice from a somewhat of a veteran investor, if you will, and that's long-term investors who normally stay in end up winning. If you look back during COVID, during 2020, the market was down 10% some days. But if you pull up a 10-year chart of the S&P 500, you hardly even see when COVID happened. If you play the long game, you normally win in the stock market. But obviously, not everybody is very disciplined with their money. So here's what happens when people let headlines control their money. They normally sell near the bottom. They panic sell when they see the headlines hit CNBC. They say, I'll wait for things to calm down and I'll reinvest. And then they kind of panic buy when they start to see, a green day. When prices start to recover, they kind of jump back in the market a little bit. And that cycle destroys wealth. Ironically, some of the best times to invest in the S&P 500 has been wars, has been 9/11, been 2020 pandemics, been the recession of 2008. And those events weren't good whatsoever, but it was basically a good time to buy stocks on sale. So now let's talk about the big winner from the US-Iran conflict, and that is oil prices. So right now, 8:30 p.m. Central Time, crude oil prices are up roughly 8%. And oil spikes can increase the price for gas at the pump, which can increase inflation. And then obviously tomorrow being Monday, you're probably going to see the energy stocks being up a pretty good bit. But you should not rewrite your wealth building plan just because of this potentially temporary spike in oil prices, right? You should stick to your diversified plan, your diversified wealth building plan. And the S&P won't collapse forever because oil jumps up and they're scared for higher inflation rate. Markets will adjust, businesses will adapt, and this is more or less just a temporary spike in oil. So if you're watching the news today, the past couple of days, and especially tomorrow, you're going to see the media using words like escalation, retaliation, crisis. They love those trigger words to get your emotions going. That's what makes people want to panic sell, and then panic buy, right? It gets people to watch TV. That way they're bringing in more ad revenue, and it kind of gets you hooked. But remember, emotion is the enemy of long-term investing. You want as little emotion as you can get in your wealth building strategy, essentially, because you're always going to end up panic buying, panic selling. You're going to overreact. Anytime you see fear, anytime you see volatility, but volatility always seems permanent in the moment, especially when you have big swings like we saw in COVID. But historically, it isn't. So here's what I'm doing personally with my money, my 401k, brokerage, all that good stuff. I'm not pulling my money out tomorrow. I'm not trying to time the market. I'm not going to sell and try to buy and lower, nothing like that. But I am going to max out my retirement account, going to max out my HSA contributions this year and invest some of that. I'm always going to keep an emergency fund, probably going to boost that cash a little bit more here over the next few months. And I'm really just going to ignore the daily scare tactics of the media, right? I'm not going to be on social media much. I'm not going to probably even look at the stock market tomorrow unless I want to buy a few $1,000s worth of VTI. But I said all that to say this. My strategy doesn't change just because the US and Iran have a little conflict going on. It doesn't change because oil is up 8%. I'm still going to stick to my long-term wealth building plan and keep my emotions out of it. So with tomorrow being Monday and the market's going to open at 8:30 in the morning, I'm probably not going to do much of anything. I might not even look at the stock market tomorrow. But one thing I am going to do is I'm going to go to work. I'm still going to invest consistently whether the market's up or down. I'm going to save money, avoid debt, and just work on my long-term wealth plan. And I think you should do the same thing. Keep your emotions out of your money, and I'll see you next week.